And welcome to the Trading Zone. I'm Joe Teague of Equity Armor Investments, portfolio manager, and with me is Brian Stutland. Brian, how are you doing on this Monday morning?
Oh man, what a busy morning, or I should say like Sunday night, late into the night. Obviously, the markets were down as far as like 2% at one point overnight. They bounced a little bit off the lows of the overnight lows now. So, keeping me up and keeping me most investors
Get
nervous about what's going on.
Yeah, get used to it. This is our new Monday tradition, right? Every Monday we're going to wake up and this is going to be the market.
I know. Yeah. I mean, I'm busy trading more than I need to on a Monday morning, I guess. Given the news of the weekend, maybe this is going to be the new norm, right, Joe? I mean, just Trump policies coming out, people trying to react to it. There'll probably be some overreaction to things, and this is the volatility we expected this year.
Yeah, and I hate to say I told you so. Might be one of the reasons why we're doing so well. Not to toot my own horn or however you want to say it, but might be one of the reasons why we're having the success we've had so far this year, because this is playing out exactly like we expected. A lot of volatility, a lot of uncertainty, and then the dust settles and we'll go from there. But it just makes sense to have some active management within this chaos.
Yeah, for sure. And that's kind of how we've been managing positions is like, the market rips higher. We're moving 2% at a crack here. It seems like up and down. We're kind of in the same spot in terms of the S&P 500 over the last, let's call it 6 to 8 weeks. And we are entering a volatile time seasonally in the year where February into March, traders get back. China comes back from the Lunar New Year, and then, volatility seems to pick up.
Yeah, the Lunar New Year will be ending next week, right? Is that right? So a lot of action, a lot of new activity going on in the market, a lot of catch up, and this is where the rubber meets the road for the year. January is now over. January effect is in play. Very positive month for the year, so usually that means good things are coming. But again, we'll wait and see. This is just more uncertainty, more volatility. We do have the VIX currently at 1986, Brian. The VIX popped maybe close to the same spot where it was last week with the DeepSeek waves going through the AI trade. Interesting to see how that plays out. We're going to get into all that. Remember, we're happy. We're here. We're happy to take your questions live. Got anything else? Come to our website, ask us questions there. You can leave comments there. You can email us there. So happy to do all of that. We're former VIX options market makers. We're on the pit. Brian, very early adapter to VIX trading, so very well versed when it comes to that. We have lots of years market making options apart from just the VIX. So that is what we do, and we of course have a focus here on the AI trade and the tech trade, which has just been ballooning and becoming such an important part of our world, and we expect that to continue. And that's what we're going to get into today, Brian. Yes, everyone's talking about the trade war. Everyone's got their own opinion, but I want to focus in on what does it really mean for these tech stocks and what's it going to mean for the AI going forward. So that's what we're going to do today. Anything else you got to say before we hop on the trade? Oh, by the way, lots of earnings this week. We're going to be trading Amazon. Stick around to the end of the show. We're going to do an Amazon trade. They have earnings on Thursday. Google, big one's going to be out Tuesday. Lots of other really important ones. Palantir, a company we followed closely. They got earnings this week. PayPal, we've been talking about recently. They got earnings this week. AMD, that's really important. Eli Lilly. Big companies earnings this week. So there's a lot more going on in the world besides just the trade war.
And I think one thing I'm just going to plug, most YouTubers, they plug their merch. Our merch comes in the form of trade ideas. We're actually live now. You can go to equityarmorinvestments.com. Check out our subscription. We give live trade updates. We're going to start doing that. This very first week will be our first trade. Joe mentioned we're going to give a trade on Amazon. We will post that out to our subscription viewers, and you can kind of tune in, follow along. We also have other trade ideas on the S&P 500, a little volatility arbitrage that we do, and much more. So go check out our
and
website.
The AI bucket too, best basket too.
Yes, yeah, of course we've got to trade AI, right? Go check out our website. Check it out. We're live now. You can get a subscription. You can also use us for investment advisory advice, Equity Armor, that is. So I'll plug them in that sense. If you're an investment advisor yourself, you can actually use Equity Armor's models to trade for your clients, and makes your life a lot easier, I got to say, because you don't have to sit there in front of the trading screen. That's what we're doing here. Right behind me is a full montage of screens that I have going, and Joe and I are crunching numbers all day long for you, so you can focus on your personal relationships. So go check it out. Revamp website. It's kind of exciting stuff. So with that, Joe, why don't we jump right into it?
Yeah, let's hop into it. Again, thanks everyone for joining us live. Anytime, I want to hear from you, so shoot me your questions. We'll do our best to answer them. Anyways, let's get it going. I'm Joe Teague, Equity Armor Investments Portfolio Manager, and with me is Brian Stutland. Brian, happy Monday.
Yeah, happy Monday. Markets are moving today, Joe. We got a lot of talk about. Big week of earnings on tap. So let's just jump into what we're seeing with the markets here.
Yeah, big earnings. Here are some of the key ones I pulled out. We got Palantir, Google, AMD, PayPal, Disney, Amazon, Eli Lilly. Stick around to the end of the show. We're going to be trading Amazon into this earnings event. I think it's going to be a really important one. And I think we're kind of positioning here, just watching this market, ready to go either way. If the market does pull back further on this trade war news, we're going to be ready for that. We're going to be, we got a plan for that. If the market does go higher, hey, that's certainly possible right here. We could turn around just like last week. So we're ready either way. I think the volatility is going to be there no matter what.
Yeah, when you look at what's going on with Canada, Mexico tariffs, certainly the markets are at least discounting things. I wonder if this will be like is it a one-time earnings event where there is like you have to now one jump down discount of earnings, so to speak, or does this become an ongoing thing where valuations need to come down, Joe?
Yeah, it's a great question. We got, the retaliation, like Canada retaliates. They're going to put tariffs on the U.S. Does that mean U.S. has to make their tariffs even higher? Is a retaliation? So a lot of uncertainties still going on here. And then, of course, there's more tariffs going on with the European Union. Could there be some sanctions, some tariffs going on there? Well, what do you think, Brian? Do you think that's the next shoe to drop? And is that also going to happen?
Well, certainly these all play a factor. That's going to really be our big story of the day as we sort of get into the markets. We're going to discuss a little bit more about how these tariffs play out. I have some opinions of where things are at. We kind of repositioned ourselves. Equity Armor, full disclosure, kind of rolled some calls down that we were long at a much higher strike, sort of to rebalance portfolios. Although I'm not putting new money to work here. It's just sort of a rebalance, rehedge here. But we'll get into that big story here. I think when you look at it, all these earnings this week, it's going to make for an interesting play on how the S&P will shake out, how the volatility plays out, how the skew structure, calls and puts are lining up. So, Joe, why don't we jump into what the skew looks like here in the S&P?
Yeah, skew, definitely making a higher high. We're higher on the skew than where we were last week when we had that rip up. So that's interesting to me. That's a little bit more concerning. Last week, maybe it seemed a little more obvious that it was a buy the dip opportunity last week than this week. This week is a little more uncertain in terms of where the volatility is trading. That was something, a very, very good rebalance opportunity that we took on our volatility last week. This week's a lot. We don't really see a turn yet in this uptrend in the volatility necessarily. So we'll wait and see. We'll see how this shapes out for the rest of the week. Do you have any thoughts on the skew here?
Yeah, I think it's interesting that the puts, the value of those relative to the calls.
I can look a little closer. It's a 1 year, by the way.
Yeah, so looking at the 1 year skew here, I think it's interesting that puts relative to calls really didn't get bid up today, this morning, versus maybe some other times here over the last few months, given really the nervousness of investors and the tariffs, right?
Right. Yeah, this was just like year-end freak out, rates going higher.
Yeah,
and that didn't seem nearly as concerning as this potential trade war and how bad it could get. But we saw the skew all the way up here.
Right. So in one sense, you're like, oh well, maybe people aren't protective enough, and you could get really a massive shakeout to the downside. Certainly we're starting to creep up a little bit. So I'm not like saying, hey, go in and buy this market, but it is interesting that the put buyers really aren't coming into the market like they were, to me saying, hey, this is a one-time event. and maybe we'll find some levels here.
Yeah, I guess just a little bit of a repricing somewhere, and then we'll go from there. I think as long as the economy doesn't get hit too hard on this, I think it could be good. There could be other forms of stimulus coming too. This could be ahead of the budget that's going to be coming out soon. The Republican lawmakers can say, hey, look at all this tax revenue we're collecting on these tariffs. We can lower taxes elsewhere, and then turn around. They'll pass the budget. 2 months later, they'll get a deal with Canada and take these tariffs off too. That's certainly one possibility the market's not discounting.
Yeah, I mean, that is a great analysis, Joe, of what could happen. And when you look at the VIX term structure here, just taking a look at this right now, I think what's interesting here, obviously the VIX futures have popped above where it used to be a month or 2 months ago. And I think that's going to kind of act as a magnet and not let things snowball too quickly in terms of volatility space, where there might be a sort of pull down in volatility off of this pop today. I think the markets would really have to roll over. Maybe when we get a little bit into some of the technicals on the S&P 500, we can talk about that, where VIX futures might continue to pop higher. But certainly if you just look at the term structure where it came from in a mean reverting product, the path of least resistance is probably back lower to the mean.
Yeah, so definitely these futures traders, these February futures traders are saying this volatility is coming lower. But I do think the risk is there for the VIX to go meaningfully higher. We do have these earnings coming this week. Just a few bad earnings with a few downgrades, a few forecasts that are much worse than expected. I think we could see things roll over. Hasn't happened yet. Last week's earnings were just kind of normal ho-hum. Everything was there for the AI trade. The CapEx was there. The earnings were there. So I think the VIX traders are not as concerned, although we are seeing now volatility trading a little higher. We got 2040 in the VIX. It is moving. It is fun to see it rip around here this morning, although a nice bounce after the 10 o'clock hour on the NASDAQ here. So we'll be watching that. This is this morning's S&P 500 futures, just really, not quite definitively making a new high here. Didn't love that. We did have this head and shoulders last week, which looked like it was going to materialize, sucked in a lot of people there, and then ripped higher. And then, yeah, I mean, this is just a big question. What do you think, Brian?
Well, I think that little carpet shakeout suck, might act as sort of like support now. So yes, we made a lower high. I wonder if we make a higher low and sort of find this little, flagging consolidation pattern that occurs. So I would be more concerned. I talked about the VIX futures and whether they can pop significantly higher. I think we'd have to break those lows from a couple weeks ago, and then that'll probably freak people out. Then we probably get a volatility pop. Until then, I think where volatility was a month ago or 2 months ago is going to sort of act as a magnet to sort of drag down and dampen volatility for right now. So let's watch those levels. What is that? Maybe 58.50 or so on the S&P is a level that I'm sort of watching, and you just drew that uptrend line. But here, look at the NASDAQ though. This is the one thing I think is a little bit more concerning, which is the fact, right there. That trend line is going to be very, very key to me. Maybe even that head and shoulders we talked about, it looks like maybe it's just starting to form here in the NASDAQ. So the NASDAQ looking a little bit weaker. We're obviously big proponents of the whole AI space. Some of that being dragged down by NVIDIA, some of the chips on tariffs and how that's going to shake out might affect some of these NASDAQ names. And, these levels right here, 21,000 or so on the NASDAQ is going to be something to watch.
Yeah, it's really, really crucial here. Now, that said, this could just be, we're talking about the NASDAQ PEs that are historically very high. We've got, close to 30 PE on the NASDAQ, so forward PE. So this could just be a consolidation period. But when you get this kind of catalyst of this trade war, it's going to hurt valuations on all these companies. It could just kick everything down. It could really cause that valuation to happen really quickly, happen with price. I would love for a correction in PE to happen over time, some sideways actions, let the earnings kind of mature, grow into these prices. But that doesn't always happen the way that you hope that it does.
Yeah, so obviously some of these technical levels are just, like I said, 21,000 on the Nasdaq. Next up maybe about 20,800 breaks there. I think 20,000 is probably back in the cards for the Nasdaq, and then certainly that happens, there probably will be a volatility pop. Maybe we get the VIX into the upper 20s at that point. So watch those levels as sort of things shake out here due to the trade wars. And I mean, given the trade wars, I mean, Joe, why don't we get into that, because that's really the big story. What's happening in the markets today? You kind of laid out a scenario where bad might be good. Why don't you talk about that? What makes things get worse?
I'm not. Yeah. So that the worst case scenario is Canada says, okay, which they already have said, we're going to implement our own tariffs on U.S. goods. The U.S. has said, hey, if you guys respond, we're going to raise our tariffs. We're gonna up it and maybe do a 50% instead of 25, or just go even further. And that's just going to make the costs even higher for a lot of companies. A lot of consumers, could hurt GDP in the short term as we try to rebalance and see where we can get these goods. So that's just the first part with Canada, Mexico. The next part is with the EU. And could we start a trade war there? We haven't yet. Is that going to be the next thing to come down? And it's certainly possible. There's lots of stuff that the EU makes, which we make too. We import a lot of cars, for example. It wouldn't be the worst thing in the world for certain car companies if people in America bought fewer German cars, for instance. Maybe there's a give and take, but there is one company which kind of worries me, Brian. It's ASML. That's a Dutch company. They make the machines that make the machines which power all this AI trade. So that's going to be really interesting to me. What is the deal there? Now, remember last year, ASML got a huge drawdown. They got hit really hard. Why? Because they were persuaded by the United States to not sell any machines to China. How is this going to shake out? Are they going to say, hey, we're not going to give you USA any more of these ships? We're going to go to China. I don't know if that's in the cards in the short term, but that's just what we're dealing with here. That's the implications here, which is just a really new and developing world here.
Yeah, it is. I think this is why, we kind of sometimes own a bucket of names in the chip space because of the fact that, one little sector that's been doing so well, such high demand, gets hit with something, or at least use options, right? In our AI trade, we use options all the time. And so, that's kind of interesting. I think one thing to note, Joe, actually, this market has moved literally about 40 handles higher in the S&P. I was just looking at the screens here, over to my side, and S&P now trading above the E-mini 6,000. So quite
VIX
a bit
around
around
1850.
Yeah. VIX coming down tremendously now. So markets are really moving around. A lot of opinions out there. Like I said, I talked about how the VIX futures, you go back a month or 2 months, could kind of act as a magnet to dampen volatility, and people kind of pick some levels here. So the rally is back on for now, but this seems a little bit too fierce, too good to be true. Might be a time to sort of rebalance if you sort of bought the dip on the open today. To take a look at levels here. Obviously, there's still some room a little bit higher to cover the gap down that we saw in overnight trading on Sunday. So with that, Joe, why don't you get into, I think what's more exciting is all the earnings coming up this week, Amazon being one of them. That's really our big play here. Why don't you get into, I'll call it our very first trade for subscription users, right? So you better be good about this one. They're going to either love or hate you, depending on this. A lot riding here. As we sort of approach the 10:30 hour here. We like to make our show about 15 minutes, 30 minutes here. We give you a quick hit on the market here, but Joe's got to play here on earnings. I think Amazon, very interesting. Looking at the forward PE of 39, is that too lofty? Are you a buyer here? What do you think, Joe?
Yeah, its chart has been phenomenal. Currently just down 1%, a little bit better than the market, or about in line with the market as we're rallying here. Great to see this morning was just kind of flat. I think I think into earnings, I think there's a lot of optimism here for Amazon. And I was saying, TradeWard is going to impact Amazon differently than some other companies. They're able to source a lot of their goods just around the world. They're a lot able to mix and match. If there is a GDP slowdown, if consumers slow down, change their spending habits, that will impact Amazon, of course. But the one thing we saw last week was the cloud continue to grow, people continuing to still spend money on the cloud, and that just in a nutshell has gotten what I'm excited about Amazon for. I know we all think of Amazon as the products that are delivered to our door, but their web services are the growth of the company. Regardless of the DeepSeek news from last week, which everyone was saying, we're going to need fewer data centers. It's absolutely false. I think first of all, the DeepSeek rumors were not true. They used a lot of these big machines. But second of all, even if it were true, if there were fewer, if it costs less to get into the AI game, more people will want to get into it, which will increase the demand for these web services, these cloud services in general. So I love the build out. I love what they have. I love this chart, just kind of sticking above here. The market's going to take a leg higher. The market's not going to fulfill some of these bad prophecies we saw at the start of the show. It's going to be led by Google and Amazon and the Mag 7 this week. So I'm excited for that and really cautiously optimistic. Now, if it does have a bad earnings, I want to be ready for that too. And that's kind of the theme that we've really been talking about this year, Brian. We've been kind of saying, hey, if the stock pulls back, buy it. If the stock has these PEs are super high, it's very easy to have something that disappoints the street here with these high PEs. But by the way, look at these earnings reports, Brian. Just look at this.
Unbelievable, right?
EPS, net income, EBITDA, just unbelievable. And this is like one of the biggest companies in the world, just able to continually have these beats. So that's got me optimistic here. Yes, AWS dominance. They're one of the largest cloud companies, the largest cloud company. They're, of course, we know them for the e-commerce, but they also have this AI potential. They're very kind of early on the AI game, but don't count them out. They got Audible. They have Prime. They have a lot of data inputs that's going to help these large language models can be able to compete. There's no reason to think that they can't be as good as the rest of them. So anyways, here's what I was saying, Brian. I was saying, I want to have a plan in place. I'm going to buy something if it goes down. I want to be able to participate to the upside. I don't need a 60% return in Amazon this year. I'm not that greedy, but I am looking kind of long-term here. This is a long-term play here. Just better way to own Amazon, risking less in the short term, still going to participate to the upside. Here's what I have laid out. Me buying the Amazon 240 call February, selling the Amazon 220 put also in February, going out to January, selling the 300 call. And I'm going to collect 650 to put this on. Essentially, I get to make money to be long Amazon. I risk less money on a downward move after earnings. And I'm going to participate to the upside all the way up to 300, another $60 of upside in Amazon. So yeah, that's how I'm laying this trade out. Do I get called away at 300? Yes. Do I have to lock up my money for a year? Yes. But I'm just a much better way to risk less to make very similar amounts right here in Amazon.
Yeah, and just keep in mind here, right? So this is expiration. He's using the February options to get some long bullish play call options, that is, on the 240 strike. So if earnings come out, they're not great, the stock kind of stays stagnant. I would be wanting to sort of rebalance things because you're left with sort of like that naked short call then on the 300 strike. So let's watch earnings. Let's see what we can do here. Hopefully the stock blows through 240 and then you're all good. If the stock sort of sits still, goes lower, maybe you get put to the stock. We'll have to do something with that 300 strike that we're short. that we use to collect, which essentially becomes a buy-rated kind of position if we go above 240. So let's watch that 240 level here in Amazon heading into earnings. But I like this from a risk reward perspective. You look at the charts, you look at the support resistance lines. This trade makes a lot of sense. So Joe, I like it. This will be exciting to watch. Hopefully we get a quick payout for people in our very first week here with our new subscription trades of the week. And look, if you're too busy to watch the show or whatever, you want a direct trade alert right to your email, go ahead to go to equityarmorinvestments.com, subscribe there. And our advisory business will push that out to you, and you can just kind of follow along with Joe and I's ideas. We've been pretty successful over the last year here, so we look forward to having you around and following us along. But Joe, we're at our new time slot here. It's official. We go live. It's crazy Monday morning, so tune in. Yeah. Make sure every week by 10 a.m. Eastern. We start to go live a few minutes after that and follow along with the show. But, thank you so much for the MIAX for the sponsorship here. We are Joe Teague here, my colleague, myself, Brian Stutland at Equity Armor Investments. Yeah, tune into the Trading Zone every Monday.
This new time slot, I think volatility traders have to be thanking us. We're bringing the volatility to Monday morning here.
Yeah, we are. Volatility seems to follow me wherever I go ever since I went in that VIX pit. So make sure you tune in every Monday right at this time and watch the markets move.
Absolutely. Yes. Thank you. Yeah, it's great. It's great to be here. We love doing what we do. We'll be here next week. Happy to have you guys. Be careful. Remember, we're always here, answer any questions. So we're excited. We're excited about the market just in general. And we're excited about every opportunity that every day brings.
All right. Catch you next week, guys.
Have a good one.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.